And now we come to trade of the day, the highlights of this week's trades. Let's get into it. Good evening and welcome to Follow the Money, bringing you the latest updates on everything finance, business, the markets, and investment funds. Our top story this week: Goldman Sachs is making bold moves in the private equity lending market. Goldman Sachs is flexing its muscles in the lending market, aiming to fill the gap left by the recent turmoil at regional banks and the reshuffling of major players like the Credit Suisse. The Wall Street giants, along with rivals JP Morgan Chase and PNC Financial Services, are eyeing up the $800 billion to $1 trillion private equity lending market, betting on an uptick in deal activity as fundraising hits record high. After acquiring a 15 billion loan portfolio from the failed Signature Bank, Goldman plans to expand its footprint in Europe, the UK, and Asia. This strategic move aims to capitalize on the growing demand for financing options among major players in the industry. By bolstering their presence in key financial hubs and increasing staff to support the operation, Goldman is positioning itself as a formidable player in the global private equity lending market. With focus on asset secured lending and a diversified approach, the Goldman Sachs aims to navigate potential challenges and seize opportunities in the ever evolving landscape of private equity financing. Also, on Follow the Money, a recent UBS survey shows that global family offices are significantly more wary of geopolitical risk. Based on responses from 320 single family offices worldwide, the survey reveals that a major geopolitical conflict is a primary concern for these investment entities in both the near term and medium term. Despite any concerns, it's clear that North America and Asia Pacific regions are the top choices for asset locations. An impressive 50% of Asia Pacific family offices are planning to increase investment in the region over the next 5 years. It's evident that both North America and Asia Pacific region are set to become the top two investment destinations globally. The findings reflect a strategic shift among family offices towards active wealth management solutions. In terms of investment strategies, family offices are diversifying their portfolios, favoring alternative investments such as private equity and hedge funds. That's all for Follow the Money. Thank you for joining us. Join us again next week on the latest updates in the world of money. Back over to the studio for Trade of the Day. Welcome to Trade of the Day, our groundbreaking weekly series where we reveal the secrets to achieving consistent weekly returns in the fast paced world of day trade. Join us every week on this exhilarating journey as we decode the strategies and mindset needed to harness the power of the market and unlock remarkable financial growth. Whether you're a new trader seeking to build your wealth or a seasoned investor aiming to amplify your gains, our series is your roadmap to success. Get ready to revolutionize your trading approach and embark on a path towards achieving your financial dreams one week at a time. Also, we love to know where in the world you're tuning in from, so post in the comments below. A reminder that this is not financial advice and that trading comes with real risk. My name is Alice, and I help traders and investors who struggle with confidence to make money in the financial markets find consistency and scale to achieve financial freedom, time freedom, and location freedom. I believe trading is the greatest wealth building tool of all time, and everyone on this planet needs access to this skill. I'm on a mission to impact 1 million people through trading by 2030. Let's go. Coming up this week, this is how you could have made 5% in the market, taking one trade, using one model, risking no more than 2% of your equity, looking to make 1 to 3 risk the reward. So you're risking 2% to make 6%. This week, I learned the importance of discipline and self control in trading. Trading is a constant battle of you versus you, and sometimes you lose, and that's okay. It's important to journal your emotions before, during, and after each trade so you can be aware of what you're doing and you can learn from your mistakes. As I develop and grow as a trader, the series and information provided on this series will also improve. Everything I share here is how we trade at I'm the Trader. We had a total of 3 trades this week for a potential return of 10%. But remember, our target for the week is 5%. Before we dive deep into this week's trade of the day, let's talk about having a trading edge and what that entails. A trading edge is one of the 3 pillars every trader must have in their trading to survive and thrive in the financial market. If you don't have these 3 pillars in your trading, you're setting yourself up to fail. Confidence in your trading edge comes from 3 things. 1. Understanding the market and how it operates. 2. Having one trading model that has IPTA signatures. 3. Having a plan and process that you follow every single day. Successful trading is boring. You're doing the same thing over and over again. This is the 3-step process I use to take trades weekly. Step 1, we have condition. This is based on the higher time frame directional bias. Step 2, stage. What sets up your trade? What does it look like? Step 3, execution. Can you execute? Have your entry criteria been met to get in that trade? The most important step is step 2, because once you understand where the market is going and you understand the setup, the entry is easy. Also, guys, if you understand price flows that occur around key highs and lows intraday, you'll have everything you need for a setup. A little nugget for you free of charge. First up, we have step 1, condition. Determine the higher time frame directional bias. Where is the weekly candle likely to go? What is it reaching for? This will give you your condition going into the week. There are several factors that go into determining the higher time frame bias. However, there are only 2 options. It's either you're expecting the weekly candle to expand higher or you're expecting the weekly candle to expand lower. Step 2, stage. What sets up your trade? What does it look like? First, we look at the economic calendar. It lets us know when to look for a setup. We look for medium to high impact news drive to narrow our focus. We stock setup on calendar day and after the news release. The optimal days to trade this week were Monday, Tuesday, Wednesday, Thursday, and Friday. Every day this week was an optimal day to trade. Secondly, we look at what sets up your trade. What does it look like? This would be your model. If your weekly analysis suggests that price is going higher, then you're in a buy program and you're hunting long formations. For our buy model, we want to see price trade below key low, displacement higher causing a market structure shift. The displacement leg must have a fair value gap busy near the swing low. We wait for a high to form to anticipate execution. If your weekly analysis suggests that price is going lower, then you're in the sell program and you're hunting sell formations. For our sell model, we want to see price trade above a key high, displacement lower, causing a market structure shift. The displacement must have a fair value gap CV near the swing high. We wait for a swing low to form to anticipate execution. Once the stage is set, when and how do you execute? For execution, we're looking to enter on a fair value gap or order block created in the displacement link in the displacement leg that caused the market structure shift. You have 2 options. You can enter a limit order at the fair value gap or a limit order at the order block. We use the fair value gap near the equilibrium of the range. You can also use the low hanging fruit, meaning the one closest to price. Your stop loss will go at the swing high or the swing low, targeting a 1 to 3 always. It's important to note that you can have both models form within the span of a day or a week, but your higher probability trades will be in the direction of your weekly program. Here are some factors to consider for high probability setup. First up, we have time, the most important aspect of trading. At what time is the setup occurring? Then we have range. Where are we within the range? Are we in the upper, mid, or lower quadrant with respect to buy or sell? Then we have liquidity. Is there or does price create liquidity right in front of the fair value gap or order block? Once price takes this liquidity and enters the fair value gap or order block, you should see an immediate reaction. Lastly, when can you no longer enter the trade? Where is your cutoff point? For me, once price leaves the 0.5% fib extension, I'm no longer interested in gaining that trade. Trading is an absolute solo sport. You have to make it unique to your personality. All of this sounds complicated, I'm sure, if you're hearing it for the first time, but it's really simple. You just have to show up on the charts and look for it. Now, let's head over to the charts and look for it in price action this week. Welcome to Tracking IPTA. This week, I found myself bringing the pressures of the real world into my trading. It caused me to deviate from my plan and my model. I entered the trade prematurely. I also moved my stop loss prematurely to secure profits in the trade because I had put so much pressure on that one trade to pan out. After two rule breaks in one day, I realized I was not in the right mental space to take any more trades. As traders, the only two things we control are ourselves and what we risk per trade. Ended up breaking even for the week, and overall, we're still up on the account 17.6%. Let's get to hunting. Grab your tools. As always, we'll be looking at the charts in bar replay mode. This means that you won't be able to see my executions. However, you will be able to see my horizontal lines, which represent the time aspect of trading, okay? The most important tool you need to track down IPDA. Now remember, even though I'm going to show you both buy and sell models, it's important to know that your high probability trades will be in the direction of your weekly program. You can take counter trend trades with this model. For example, if you can take sell setups even if your high time frame directional bias is bullish, and vice versa. It's just your probability of winning reduces significantly when you go against your higher time frame directional bias. If you're new to trading, I do suggest only taking trades in the direction of your weekly program. We're going into this hunt with the understanding that you guys have already arrived at your higher time frame directional bias. This is the hunt for just purely setups. To the hunt. Let's go. Monday, May 20, trade of the day breakdown. We had a PM session buy formation. As you can see, we had the news, medium impact news come out at 9 a.m. PM session start. We had price trade below key low, displacement higher causing a market structure shift. The displacement leg has a fair value gap busy near the swing low. We're waiting for a swing high to form to anticipate execution. For execution, we're looking to enter on a fair value gap created in a displacement leg near the equilibrium of the range. As you can see, we had the fair value gap created right here. You would have been tagged in that trade at 149. Doesn't break even, taking out that trade at 208. Total time in that trade was 19 minutes. Drawdown in that trade was 34 ticks for a 2% drawdown. Okay, so you would have lost this trade. Let's consider the factors that made this a high probability trade, even though you took a loss that comes with trading. That's the one thing promised to traders. Okay, guys, you will lose in this game. You have to be prepared for it. All right, so we had the time factor PM session. We also had the range. We're in the lower quadrant, middle to lower quadrant for a buy. Two things matching up to make this a high probability trade. And even though it resulted in a loss, that's fine. Charge it to the game. Keep it pushing. Tuesday, May 21st, trade of the day breakdown. We had a AM session, buy formation. As you can see, we had news, medium impact news coming out in the morning. 10 o'clock, post 10 o'clock is when we're looking for the signal. We had price trade below key low, displacement higher causing a market structure shift. The displacement leg has a fair value gap busy near the swing low. We're waiting for a swing high to form to anticipate execution. For execution, we're looking to enter on a fair value gap created in a displacement leg near the equilibrium of the range. As you can see, we had a fair value gap busy near the 50%. You would have been tagged in that trade at 10:19, breaking even at 10:33, getting out that trade at 10:36 for a total time of 7 minutes. Drawdown in that trade was 17 ticks for a 6% bagged and tagged. Let's look at factors that made this a high probability setup. We're always looking for 2 out of the 3 between time, range, and liquidity to be present in the trade. We had the time aspect is post 10 a.m. is when we're looking for a setup. So we had time aspect. We also had the range aspect. We're in the lower to middle quadrant of the range for a buy in a discount below 50% at 50% or below 50% for a buy. We had two things matching up there to make this a high probability trade, getting you a 6%. This was the same trade that led to my two rule breaks. I'll explain it really quickly. So usually I'm looking to enter the market post 10:10, but as you can see, I had a formation form before 10:10. Price trade below key low right here, displacement higher causing a market structure shift. We have a busy near the swing low. I entered at a busy high right here, stop loss below the swing low, and as you can see, it came and took me out because I got in before 10:10, and usually I'm looking to get in 10:10. I'm like, okay, cool, fair enough. I broke a rule, but the trade is still valid. I saw liquidity get taken below the key low, displacement higher causing the market structure shift. I panicked. I don't know why I was panicked. I didn't wait for the swing high to be confirmed. As soon as I saw this fair value gap busy, I put a limit order right here, and I was tagged in on this candle. I put my stop loss up here to 1 to 3 was up here somewhere, and I was just impatient. I don't know what was going on on this day in my head. I know what was going on, but I was just impatient. I was placing too much pressure on the trade. I didn't wait. I moved to break even. I don't know why. I was just like, it was taking too long to hit the TP for me. So I moved the stop loss higher to secure some profits because I didn't want it to come back and take me out. I already took a loss on Monday. I didn't want to take another loss, but I don't know. I just brought too much of my personal life into trading, and you cannot do that. Okay. I put my stop loss here, and it took me, well, yeah, I think I moved my stop loss here. It came and took me out, and then it would have actually taken me out at TP right here if I had just been patient and just left it alone and not interfered with the trade. It would have been fine. But lesson learned, I got myself together. I couldn't trade anymore for the week. So Wednesday, May 22, trade of the day breakdown. As you can see, we had a PM session buy formation. We had FOMC minutes at 2 p.m. We had price trade below key low. We take sell side below key low, displacement higher, causing a market structure shift. The displacement leg has a fair value gap busy near the swing low. Waiting for swing high to form to anticipate execution. For execution, we're looking to enter on a fair value gap created in the displacement leg near the 0.5%, 50% of the range. As you can see, we had the fair value gap right here, but at the near the 50%. You would have been tagged in that trade at 319, breaking even at 332, getting at that trade at 330, 332 for, or the same time actually. It has the break even for a total time in the trade of 13 minutes. Drawdown on this trade was 57 ticks for 6% bagged and tagged. Let's look at factors that made this a high probability setup. First, we had the time aspect. It's the PM session. We've had news come out already. The range, we're in the lower quadrant. We're near the middle to lower quadrant of the range for a buy. We're in discount. Also, we have liquidity created in front of the fair value gap busy, making this 3 out of 3 for a high probability trade. And as you can see, minimal time in this trade, 13 minutes. So if you took a trade on Monday and you lost, fair enough, charge it to the game. You're allowed to go back into the market and hunt for the setup. Tuesday, you're 6%. You took the Tuesday, you would have been up 6%, get netting you at least 4% for the week. You could have decided to keep trading, but usually at 4%, I'm content with that. I'll stop trading, but it's up to you. You could have took Wednesday's trade and got 10% for the week, but I would have been content with 4% for the week. That's all for tracking IFTA this week. Hopefully you enjoyed this one. See you guys next week. Every week we have shown you at least one or more opportunities that could have netted you 5%. With a 2% risk, if you had taken all 3 trades this week, you'd be looking at 10% for the week. But remember, we're only looking for one trade that will net us our 5% and we're done trading for the week. Us traders, we must be content with enough and we must learn to limit trade frequency. The less you're in the market, the less of your money it will take. I hope you found Trade of the Day insightful and hopefully you enjoyed this one. Deciding to become a trader is the greatest decision one will ever make. It is the fastest way to build the life that you want. And too many of us fail at it, 90% actually. This is because we're not equipped with the right tools to ensure survival, let alone thrive. There's a way to succeed at trading. Trade of the Day is about showing you how we at I'm the Trader are doing it and how you can do it too. Always remember, this skill is not easy to master, but it's also not impossible. You only fail when you quit. Thank you for watching. See you all next Saturday, same time, same place. Happy hunting.